In this video, I'm going to be sharing with you a scalping session with price action trader. We're looking at S&P 500 mini futures, and the structure of the market is indicating a trend range. Right now, I can see there is a strong support at the bottom, resistance at top, and when I'm trading in trend range, my goal as a trader is to look for setups at the bottom and at the top because we want to buy low, sell high, and I want to fade the breakouts. Right now, I can see, especially when I look at higher time frames, that there was quite a strong bullish leg up. So I'm not picking top just yet. In order for me to consider selling, I would like to see push below EMA first, because right now I can see small support forming, EMA keeps rejecting. So this is kind of area of development. Looks a bit too bullish for me to sell. And at the same time, I don't really want to go long at the top of the trend range. So I'm just going to be waiting until market develops. Alright traders, so I'm resuming the video because I just entered a second entry short after uptrend played out because of a new low. First entry short, second entry short at the top of the trend range. Actually, this is a failed breakout. I didn't like selling here because we had an uptrend working higher break, new extreme. But because we finally created new high that is higher than this latest highest high inside of this channel, most breakouts according to rules will fail. So we're selling high according to range rules. This is a decent bearish bar, only 1.25 size. So I'm scalping for 8 ticks, leaving one contract as a runner at the bottom of the trend range because I'm just applying the range rules. You want to buy low, sell high, and because uptrend played out, this is quite a broad sideways break. There's a big chance there is going to be at least a little push to the downside. We are bouncing off the order, but we need to tick through. We didn't fully scalp out just yet. And we finally tick through. So I'm gonna put the stop loss to break even because anything I make right now on the trade is going to be just a bonus. Although it could be significant because we could go all the way down here, but I don't know this. The main portion is the scalp. So hopefully it makes sense. You can see first leg, break, second leg, two leg pullback, selling high, letting the uptrend play out first, following the trend line rule, and only after uptrend played out, and it's quite a sideways broad break, I'm allowed to be selling, fading the breakout, which means trading the breakout against its direction. Most breakouts out of trend ranges will fail, so I'm not buying even though the momentum looks good. Our runner just got hit. Okay, looks like we barely got out, but this is why we go mainly for a scalp. That's okay. Now, I'm still playing the trend range. I'm not looking to go long just yet, but because this kilo is holding again more bullish, I would need this time a failed second entry long below EMA reversal pattern to trust they're gonna go lower because it is holding more and more bullish. You can see another rejection right here, which is not what I want to see. So right now I'm gonna be patient. I'm gonna sell only if we get a break below EMA and a failed second entry long. But I'm still playing the trend range. This was a long and healthy trend range, so I'm not really looking to go long just yet. Resuming the video because we had a failed second entry long. This was quite confusing area because we had bullish imbalance, series of high lows breaking out of the trend range. Once you can see the bullish imbalance forming, this means I stop looking to fade the breakout because the breakout may be successful. We start with healthy trend range, breakout failed, bullish imbalance developed, but this was quite bullish, so it was tempting to look for a wider channel. But since I'm trading a trend range, I don't really like looking for channels that are too broad. If I'm going to measure the measured move of the trend range, you can see something around this. I can also make it a little bit lower. I'm going to copy it and put it at the top. I can notice that we reached the measured move of the trend range. So we're not only looking for measured legs, we can also look for two-tier trend range to give us an idea what may happen. So this is quite common. I wish I was a little bit more ready to focus on the reversal down because we had a failed second entry long reversal pattern. But because this was too bullish, the bullish spike, they trap all the bulls, it was a little bit confusing. So I didn't really take this, but looking back, it makes sense what happened here. Fell second entry long back into the trend range. Our downtrend played out with the break and a new extreme following the trend line rule. We have strong push above EMA, so I'm going to be monitoring this bullish push. There's going to be decent second entry long at the EMA. I will consider it because this option is going to need new extreme. If we have a break, because we just played out with the break and new extreme. Alright, so we have a very tempting second entry long because it is also part of the failed second entry short that formed earlier. While this channel needs new high, but because the price action right now finds itself in sideways structure like this, I wanted the second entry long to form a little bit lower so I have room to get out before creating new high here or these highs. Had it formed a little bit lower, I would have liked it because it's a continuation of the failed second entry short and a new high for a entry long, second entry long. But right now it is a little bit sideways, so I'm going to be waiting here. Right, traders, I'm resuming video again. We have a second entry long while the spike and a channel needs new high, but the bar is very close to reaching these highs. So I'm trying to see if there's going to be pullback to get my limit order so I have room to scalp out for 2 points before reaching the high. The bar closed unfortunately way too big, so I wanted to use deeper limit order here. Sometimes when the bar ends so big, there's a pullback before it goes higher. So this is what I'm trying to do here because we have a second entry long, spike and a channel needs new high, EMA keeps holding. I may do a little bit like this. How big is the stop loss? Well, not that small, but I really think we're going to push higher and to create the new high here. I decided to cancel the order because we created almost a point up. I was hoping really to get a pullback on the secondary bar after our trigger. So right now we're getting very close to double top, so I don't have any more leeway, so I'm canceling the limit order here. It looks like had I kept my limit order at the initial place, it would have ended up working. I was also considering re-entering above this high low confirmation setup of the second entry long, but as you can see, there was no trigger above this bar high. We form micro double top, we have a new high, first entry long below EMA. If there's going to be second entry long confirming the support, I would consider taking, so I'm looking for second entry long at the EMA right now. Alright, traders, I'm resuming the video as I'm going to take a high-low confirmation setup of the second entry long. It's not forming that great. We had a bearish bar, so I'm using double bar entry, meaning I'm waiting for this bar to trigger and then see if we can get a pullback lower. I'm actually going to chase it a little bit higher. I don't want to get my stop loss too big though, but this is high-low confirmation setup and we need to get new high. And we didn't get filled, so I need to cancel the order now. I'm gonna wrap it up with my one single trade. It was a solid day following price action rules. Let's go through the structure from the very beginning of the session because we started with very tight trading range, EMA flat, prices swinging up and down through the EMA. However, every single high is lower and lower, which gives this more of a bearish bias. For this reason, I'm not really looking to go long at the bottom just yet, even though it works, because every single high is just lower and lower, so there is a slight bearish bias. We actually had a failed second entry short, but you gotta be careful because we have overshoot, and you can see the failed second entry short is lower than the high low, which means this bearish push down is much stronger. So you gotta be careful here. However, once you get a nice confirmation of the support, you're buying low according to rules, rate your one single bar second entry long, you now can safely consider buying. I don't see any decent good short opportunity for a while. Everything is so congested. However, I do still follow the trend line rule because it applies even inside of a trend range. You will increase your odds picking the bottom and the top if you follow the trend line rule. So as the uptrend break new high, most breakouts fell at least temporarily. We can see the market evolve into bullish imbalance because every single low is higher than the previous one. Once you see imbalance, you have to stop fading, you have to stop selling. So after I see this bullish push up, EMA holding, you can see I'm pausing looking to sell out in the failed second entry long below EMA or confirm downtrend. Now this is happening, so bullish imbalance eventually broke market higher. This area was a little bit confusing because it is starting to be way too bullish, but at the same time the structure is still overall quite rangy and no good channel fits because you don't really want to be drawing channels that are too broad for trend range. You can see you can measure the first range, predict the target, so this is measured 2-tier trend range, so you can see it makes sense why all the traders are taking profits here. You had the great failed second entry long reversal pattern. If you have a second entry short but it's far from the EMA, of course you cannot take it this far from the EMA. You have a break, so you expect some setup below EMA that never formed, market just created, push straight to new extreme, which means I'm pausing looking to sell once I see a break new extreme. Push above EMA actually is confirming the bullish reversal. EMA is holding. We have a couple second entry longs on the way up. Now I'm looking for wider channel because the short-term one, as I was playing at the time, like this, doesn't really fit the structure. It's not proportionate because this move up is so much larger than the initial tiny spike in a channel. For this reason, I know I'm safe to be playing the wider channel because it has a lot of confirmations, looks very healthy, nice and confirmed channel. The trend line rule says after break, we expect for price action to create a new extreme, and this is indeed what happened. We had a high low, but you needed to form double bar entry. Actually, if you keep your stop loss one tick below the signal bar, which is what you always have to do, even when using double bar entry, you still would have survived. But this was really the nice setup. You have a first entry long, second entry long. By the way, the failed second entry short never triggered here above bullish bar. It would have to be another double bar entry, but this time there was no trigger and there was a nice high-low confirmation setup at the bottom of the trend range while the opportunity to high and trend line rule played out. So this is the overall structure for the day. Fairly predictable price action. You need to be a little bit patient because the day started with quite a slow development, but shortly after the bullish channel started, and it's pretty much straightforward. You're just trying to time the entry properly. You're drawing the short-term channels and you follow the main trend line rule. So I'm going to wrap it up. I hope you had a good trading day and I'm going to talk to you next time. Good luck with your trading.